Good morning, ladies and gentlemen. My name is Greg McCloskey. Today's date is September 28, 2022. Lots of activity in the markets as a result of the Bank of England coming in and intervening in the bond market. They decided that they would buy their government debt to try to thwart the exodus out of their debt instruments and out of their country and out of their pound. And also said that they would delay the bond selling that they were planning on doing until September. So they're buying bonds they were going to sell. And they're also looking to potentially raise interest rates. All this while the government is trying to stimulate the economy with lower taxes and also helping on the energy front. This is all causing all sorts of havoc in the market. And when you have havoc in the market, you need to rely on technicals to give you price bias clues. So that's what we're going to do next. Okay, we know in the sterling versus U.S. dollar on Monday, the market plunged to the downside. Really, on Friday and Monday, the market plunged to the downside, taking out this trend line here on the daily chart, and fell on Friday, fell on Monday, went all the way down to 103.53. The high on Friday, by the way, was at 112. So this is like a little 900 pips to the downside before the market started to rebound back to the upside yesterday, and again here today. If we take a look at the hourly chart here, this is the Bank of England coming in saying they're buying bonds. We saw the price move up, and where do we go? We went right up to test the high price from yesterday's trading, and that's it. Okay, we couldn't get any higher than that, and the price started to move back to the downside, and we made a new low here near the 105.45 level, so moved up to 108.36 to 105.45. That's a pretty big move here intraday, isn't it, in a matter of minutes here? So lots of volatility in the market. You have a choice. Do you want to be in it or you want to not be in it? Let me point you to a level that might be interim, that might give you some clues that traders might lean against here for a trading purpose. You have to be careful, folks. These are big moves, so be careful. And it's this 38.2% retracement. It starts at this high right here. Why did I pick this high? Because it was the last time the price tested the 100-hour moving average. You can see the price has been using the 100-hour moving average as resistance since the last time, and then that move, that test right here where the market tested that led to this sharp decline through here. So this is a trend move, and so I put a Fibonacci from this high to this low, and the 38.2 of that move comes in at the 107.392 level, and that is where the price moved above yesterday and then held support and then moved higher and held support and then broke below it and held resistance and held resistance and held and moved to the downside and then broke above and then moved back below, and now it's back in play. Okay, so this is going to be our barometer here for bullish or bearish in the short term, and I suggest that you do play this in the short term because you just never know what might happen when you have all this sorts of intervention. So use this level as your barometer for bullish above, bearish below, and if you want to lean against it on a rally to the upside, do so with the stop above. If you want to go long on a break above it, then do so with the stop below. And on the top side, if we're going to go higher, we have this other level right here, here at the 108.36 level. It was a high yesterday, it was high today on that intervention, and also coming to that level is the falling 100-hour moving average, which isn't very well, it's like 20 pips away, but it's moving quickly to the downside here. So we look for that 100-hour moving average in this top level to be another key level similar to this level. Other than that, the bears remain more in control here, folks. For the currency pair, we are trading below the 38.2, and that's a minimum retracement that you have to get to and through. If the buyers are to take more control, they're not doing it, so the sellers are still winning, but there's that threat of intervention. So we have to be careful in what we do and make sure we understand our risks. So hopefully that outlines your risks. Let's take a look at the euro versus U.S. dollar. And before that, we saw the intervention, and this volatility here. We did see the price make a new low. This is the lowest level going back to 2002, of course, for the euro versus U.S. dollar, 0.9535, moving further away from the key swing area here between 96.62 and 97.08. Going back to the weekly chart and way back to the left side over here, this is from June to October 2002. The price bottomed in this area between 0.9662 and 0.9708. Let's go back to our hourly chart. That's this level area right here. And as you can see in trading over the last few days, we've seen that area find resistance against it. So that is a key level, and we're also seeing lower highs, of course, and lower lows, of course. So the trend is still to the downside in the euro versus US dollar, and ultimately we're going to need to get above this yellow area here, that swing area from the weekly chart going back to 2002, and get above the falling 100-hour moving average. The 100-hour moving average is going to make its way down here through that level. So it's going to be an easier hurdle as long as the price, so that's sort of good news from us from a technical perspective, in that the risk for any shorts is still, it would be get smaller here. And the bias still remains to the downside, but that's still a ways away. From a technical perspective, this is really the key area. Now, I might also say that when you try to build off of a low, and if I'm not saying that that's what you should do, because the bias is to the downside. Okay, the trend is to the downside, but the closing level yesterday came at the 95.92 level, and we are trying to stay below that level here as we trade. Actually, we're trading right at the level 95.93 currently. So the price is trying to get above that level, and getting more in positive territory might be a good thing for the euro versus US dollar. That's just on the short term, but you got to hope that it stays above that level. We're not getting a lot of clues from the 5-minute chart, but we are above the 100 and 200 bar moving average, which is a little bit more positive as well for the euro versus US dollar. So be aware of that. The dollar versus yen is trading. What we're seeing here, pretty obvious trade, is the high price, which is just below the 145 level here. That was high from September 7th and the high from September 14th. This move from here to here in rather short time was as a result of Bank of Japan verbal intervention. This move, where we moved above the 145 level, was a result of Bank of Japan actual intervention. So this is verbal intervention, this is actual intervention, and I'm not surprised that in yesterday's trade, when the price and really earlier this week, when the price moved up toward the 145 level, we are seeing some sellers against that level. So the sellers are trying to remain in control here for the dollar versus yen. Move below this 144.55 level is another level of interest, and basically it defines a bunch of swing lows and swing highs through this area right through here. You can just eyeball them all yourself. And moving below it would be more bearish here in the dollar versus yen. If we get below that level, we're going to start to look toward, I would say, this low, the low from yesterday. Why not? And then we're going to start to look toward the 100 and 200 hour moving averages, which are near converged, indicative of a market that is non-trending. Okay, and I've outlined that I would expect that the range would be something like this. I know it seems wide, but it's 140 to 145 here, with the 100 and 200 hour moving averages as the barometer in between for bullish and bearish. So right now we're at the top of the range, and as long as the price remains below that level, we may be able to see some rotation back to the downside. So there you have it. Look at some of the major currency pairs. My name is Greg Michalowski. Be careful, understand your technical levels, because in this types of markets, you need them. You really do. Okay, talk to you later. Bye-bye.